trade that you guys are doing, does that mean you're including a stop loss, a buy limit, sell limit, buy stop, and sell stop on every single trade? Is that what that means, or am I digging, or is that too far? Like,
yeah. So risk
you can break
management.
that down for me. That would be great.
No, that's part of risk management. It's the lowest total goal, right?
Yeah, but I think when you so all right, so look, risk management, right? Knowing. Hold on, y'all. Let me get my charger. I don't want this to die on y'all.
Yes. Okay. So proper risk management specifically pertains to your actual account. So how your account size and how much money you're actually risking, right, per trade. So they say between if you have between $0 and $100 in your account, you should never go over like a 0.05 lot size. So you can trade between 0.01 and 0.05 per trade if you have between $0 and $100. That's what we're talking about regarding proper risk management. And then when you move up, like $200, if you have anywhere from $100 to $200, you can trade as high as like 0.1, right, per trade.
Okay.
That's what they're referring to specifically, your lot size.
Okay.
Yeah.
All right, so let me harp on that a little bit more, man, because so Greg, so like let's do some examples, right? Now you tell me if you want me to. Now I can write this down. I can type this down, or I don't know if you're a visual learner or an audio learner, but
I'm a kinesthetic learner, to be honest, bro.
Really? So you learn as you do.
Where is he? Are you in Charlotte?
No, I'm in Detroit.
Lit.
Oh, Motown.
Lit.
Yeah.
Okay. All right. Okay, that's what's up. All right, so look.
I wish though I went to A&T. Y'all, I wish I would have started this when I was back at T, man. I could have pulled up.
I think everybody wish they learned this a little bit earlier, bro.
Absolutely.
I think everybody wish they learned this a little bit earlier than they did, bro. If I knew this when I was 18, oh my goodness. Let me tell you something. Boy, it'll be ooh.
I wouldn't have went to college for college.
All right, so Greg, let me show. I'm gonna share my screen, man. I'm gonna type some stuff out for you. I'm gonna talk it out. Let me share my screen with you. Risk management. This is actually a great topic. So, Greg, always know how much you're risking on each position, right?
Okay.
So one of the mistakes I made as a new trader, I used to stack. That's how I had my first loss. I made my first profits and blew my first account all in the same night. Why? Because I was stacking. What is stacking? Stacking is when, I'm going to show you. I'm going to give you an example, right? Because I'm going to show you exactly what happened. I got $100 in my account. Right? Show you. That's why risking. Like first year and a half of trading, y'all, I didn't take risk management very serious. Because I was just like, man, I'm nice. I don't need risk management, right? We don't control the markets, though. That's why risk management is so key. And it's so key in becoming a profitable trader. We don't control the markets. So if you're trading with a stop loss, y'all do know it's something called bank manipulation, right? They're going to stop. And I'm going to answer your question, Greg. I'm about to start preaching. So look.
Yeah, you're getting in your bag, brother.
So Greg, let's say you got $100 in your trading account, right? You heard Andrea say, if you got $100 in your trading account, you should be trading a 0.01 and a 0.05.
Yes,
in between,
sir.
Right? What I like to do, or what you don't want to do, I should say. Actually, let me find my rectangle, man. Let me show y'all something. This AU, you guys, it's my favorite pair. So I'm going to use AU as an example, all USD, right? So my rule now, so I don't stack. So let's say, Greg, let's say I enter a sale right here, right? I'm gonna put a line. Remember, you got $100 in your account, right? I'm gonna show you two scenarios. I'm gonna show you a win and a loss, right? So on the win, let's say you have $100 in your account. You enter right here at this week. You get a perfect entry, and you say, all right, I'm gonna use a 0.05. I'm gonna use a 0.05. I'm feeling real risky today, right? I'm gonna use a 0.05. I enter at 0.68207. So it's 0.6820, right? You're in a actually, if this happened, you probably ended down here, right? You saw that bearish candle. You're in at 0.68142, right? 0.05.
Is Greg's last name Shields?
Yes, Greg. Yes. Yeah, Greg Shields.
Yes, ma'am.
So $100.
I'm putting some in the chat for you right now, Greg.
An account.
Okay.
All right. Trade a 0.05 on it, on a sale. So risk management isn't only about what you risk, it's also about what's your plan. Like, what is your exit strategy? Are you trying to catch a certain amount of pips? Are you trying to take this to the next level of support? Are you trying, you know what I'm saying? So, you know, you're obviously gonna come up with that on your own, whatever your strategy is. But let's say you enter right here, right? 0.05. So you know 0.05 is 50 cents a pip, right?
Yes.
So, okay. You sell it. Down here, you see all yellow candles is lit, right? Oh yeah, I got, you know what I'm saying? You up 23 pips. Then you see this blue candle, and you're like, let me get out. That retrace, you start losing money, you're like, let me get out, right? This is why that customizable daily growth plan is so you know, key, because you know, if you got 18 pips at 50 cents a pip, that's $9, right? 18 pips, 50 cents. Yeah, $9. So now your $100 is $109. So let's say your stop loss was above, say you put it like 2 or 3 pips above this high candle, right? It's just an example, y'all. Just put you put your stop loss right here at 0.68242, and you entered at 0.6814. So the way to do that math, to know how many pips you're risking, y'all can either take this tool right here to the left on your trading view. Looks like it's a measure, looks like a ruler. Take this, and y'all can, like how I applied my entry, this red line, and this top line is my stop loss. Y'all can actually take this from here up and say, okay, I'm risking 10 pips pretty much, right? Or you can do the math and take the last pip out, the last number. So we sold at 6814, the stop loss is 6824. Take the bottom number from the top number, 10 pips, right? So you trade the 0.05 and you're risking 10 pips. So you're only risking $5, which is great. Great risk management, in my opinion. Some people say that that's too high. They say because that's like 5%. Because some people don't like to risk 5%. I've been trading for 2 years, y'all. I'm not gonna tell y'all what you should risk per trade because I know everybody's human, right? Okay, cool. Greg, Andrew just put proper risk management little chart in the chat for you too, right?
Yo, thank you.
Oh yeah, for sure. I'm not gonna say only risk 1% of trade, 3% of trade. I'm just gonna tell you, look, risk what you're comfortable risking. Cause this ain't my money, this your money. And to this day, I don't always risk 3 to 5%, to be honest. But you gotta understand that that's why I risk manage. So look, I do one entry on my MetaTrader 4 per trade, right? So I saw this. Let's say I thought this was a good sale. What I used to do was this, though, Greg. I'll show you what I used to do. Because this trade, you would have won. You took your 18 pips right here, you got $9. You took your 100, made 109. Now let's say I sold right here. After this little bearish candle closed right here, right? I don't know if you can see, I'm gonna make it bigger. Put your stop loss up here. So you enter that 0.6810. And your stop loss is 0.6824. So now we're risking, it's that 14 pips, right? We only got one position. So look, this is what I used to do, Greg. Sell here, right? Then I see it going in profit. It's the 15-minute chart. So I see, okay, it's consolidating, not really moving, but I ain't really losing money yet. Then I see it start to go down. I'm like, oh, snap. Starting to go down. Okay, bet. Right? Because while these are happening, while these candles are actually being developed, we can't see, like this, we can see past that and now, but when this was happening, you didn't know what was going to happen, right? So you enter another sale right here. And this time, you go from a 0.05 to a 0.07, right? Your stop loss, let me type this out for y'all. Tell you how, man, it's so hilarious looking back what I used to do. You got a 0.05, a 0.07. You're already risking on this one, on this particular, this is super key for y'all. I know I'm being long-winded, but it's super key. 0.68109, risking, if the 14 pips. So 14 times 0.05, $7, right? You got $100 in your account. Then you get in again at 0.68100. So now you're still risking 14 pips. But now you put a 0.07 in, right? Because it's still looking real bearish. You think it's going to dive down. 14 times 0.07. Hold on, y'all, let me get my calculator. What's that, 70 cents? 0.07, 70 cents, right?
Yeah, that's correct.
So now you're risking $9.80 on top of the $7 you're risking, right? Then price start to come down here. This candle closes bearish. Let's say that this candle right here ain't even got made yet. So you like, yo, it's moving. I'm in blue. I done paid the broker back. It's lit. Because this is like a lower high. People who have watched me teach, lower high, right? Mm-hmm. Variation, boom, all that. You like, oh, this is what AJ was talking about. I want to put a 0.1 on here. In fact, man, I want to put a 0.2 on here. I'm just letting y'all know what I used to do. I used to be this guy. Don't be that guy. Right? Hold on, where we at? Oh, you already did it. All right, boom. Matter of fact, and taking back to that night, I would have ended this. Matter of fact, I didn't do a 0.2. I would have did like 3 more 0.7s. Stacking. So stacking is when you put a whole bunch of orders in at the same time, at the same position in the market. Okay. This right here should be one entry. Even if this broke this low, this should be one entry. But let's say you got 5 positions in right now. Andrea, I'm about to say laptop, she want to nap. So now you got 3.07s in. This is super extreme, y'all. I'm just giving y'all I'm trying to show Greg why having risk management is like super key, right? So now you done put in 3 more 0.7s at 6.808, 6. Because you think you about to get rich right now off of this drop that's finna happen, right? So now you enter a sell again at 6.808 and you got the same stop loss. But now you're risking 16 pips. So 16 times 70 cents, $11.20, and times that by 3. So now you're risking an additional $33.60. You got 5 positions. 1, 2, then these 3, right? all of these lines. Now, what starts to happen? So you got $100 in your account. Let's do the math. 7 plus 980 plus 3360. We are now risking half of our account. We are now risking $50.40. Right? What starts to happen? Price starts to retrace on you. Go up. You panicking. You see your account. You see your account flashing. So what happens is a lot of traders will get out. Soon as this happened, this was me. I was that guy. Like when it got here and I saw, oh, nah, it broke resistance, bro. Like, oh my God, I'm about to blow my account. You panic. Psychology. You start to panic. You know what I'm saying? Like, because you start to see that, oh, snap. I'm really down like $30 right now, or however much you're down once price gets right here. And you start to close. Why? Because you was worried about your account getting blown. Why you worry about, you shouldn't be, if you're using proper risk management, you shouldn't be worried about that. You should be able to lead the charts. You really should be able to lead the charts, come back and be okay with the result because you did your proper analysis. But if you don't use proper risk management, because you done entered 5 positions on a $100 account, and this is the equivalent of trading 0.05, 0.07. This is the equivalent of trading $3.50 a pip. Like you trading a 0.35 on a $100 account pretty much once you got 5 positions in. That's why I say, Greg, risk management is pretty much knowing what you're risking once you place buy or sell every time you hit buy or sell. You feel me? Like,
okay.
Don't, you know what I'm saying? Like, place one position, right? The ideal thing look like this. And I'm going to do a training on this later on, but I ain't going to do it tonight. I'm going to show y'all something. If you're going to do that, if you're going to do multiple orders, then do it like this. I'm going to show you. Then I'm going to get the key areas question. Does that help at all, Greg?
Most definitely, bro.
Okay, so let me show you. If you're going to do it like this, let me show you. Say we at the 4 hour. Higher the time frame, the better the picture, the better the analysis, right? So let's say where are we currently with AUD USD? Let's do a little testing, right? So right here was a big bear run. From here down. From lower high to where it found support. That's about 1, 2, 3, 4, 5, 6. It's probably about 2 days, 2.5 days, right? It's being recorded, Ty. I got you. So I enter on the small time frames, Greg. I get my analysis from the higher ones, and I take them to the lower. Once I got my bias meaning, do I think the market is bearish or bullish? I go down to the lower time frames, and I pretty much like correlate it. Let me go back. I'm gonna show you. But if you want to like do multiple orders, this is how you should be doing it. Say you're selling, right? I'm gonna tell y'all right now, this right here is a cheat code. Y'all about to come up crazy. This spot right here, this is the power of using your lower time frames for entry. The lower time frames make up the higher time frames. So after I saw that, y'all gonna hear me say bullish engulfing and bearish engulfing a lot. Be prepared. You're gonna hear me say it so much that you're gonna start to, even if I'm gonna break it down, you're gonna start to know what I'm talking about. But after I saw the 4 hour time frame make a resistance point and give me a bearish engulfing candle, I started looking down on the lower time frames for lower high points to enter off of, combined with engulfing candles or variations, right? So Greg, if you wanted to feast, really feast, bro, like this is the gems right here. This is the power of GTI. That's why I need to tell everybody what y'all got going on, because we got the gems for real. So look, let me zoom in a little bit. It's the only way you should not stack, but I call it scaling in. And this how you catch the whole move. If y'all want to catch the whole 4-hour drop, this how you do it. And I'm just using the M30 for an example. You can use the M30, the M15, or the M5 to use for entry. Always, if you're selling, always make sure. I told Andrea and Olivia and Ebony this the other night. Y'all sell at your high points, buy at your low points. So a lot of times people get caught buying on higher high points on lower time frames, and they're wondering why they're getting hit with all this drawdown. You know what I'm saying? Look at this. Every red line I'm about to mark up. So the 4-hour time, like the 4-hour has engulfing already happened, right? All of these right here, you could have scaled in on RUSD when this happened. Lower high point. Well, actually, no, not that point. I wouldn't do that. I would have waited for that to close. Here. Hold on, let me move this out the way. Here, so let's say you want to sell AU, right, Greg? You put a position here. This red line, your first position. You don't put 3-4 positions right here. Just off of risk management. You know what I'm saying? Like you enter here, right? You enter right here, you've been in profit. You know what I'm saying? 1, 2, 3, 4. Yeah, so in about 2 hours, you'd have been up, instead like 6 pips, right? Then they came up, made resistance again. This candle right here, 1, 2, bullish bearish. Bullish bearish made resistance, and this candle engulfed that one. And you could have entered again. Always knowing what you're risking though, right? But you follow along with the trend on the big picture, but you're using the lower time frames to scale in, right? Came down, broke support, came down, baby retest. But you saw a lot of bearish action, bullish bearish resistance. I would enter right here. So at each lower high point, if I'm trying to sell, after I see like the engulfing candles happen, this is how I trade. Like I'm literally telling y'all what I look for when I'm entering trades. That's how you do it. But one entry per lower high, or in buy situations, high or low. That makes sense.
Okay. Yeah.
That makes sense, bro. Don't get in the habit of, oh snap, it's about to go down. Sell, 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 sell. You got 5 sell positions. But you sold right here, Greg. You sold right here. Now you panicking because you negative $47 on your $80 account. And now you close. But why? You didn't close because you was wrong. You weren't wrong. Look what Price did. You closed because you were scared to lose all that money, but you was only scared to lose all that money because you didn't use your risk management.
Fire.
Once I got risk management down, and then y'all, when you new to trading, you probably coming from a job. If you're not coming from a job, then that's what's up. But most of us are coming from a regular job. The people that I know to trade. So why are we in a rush to get rich in a day? But I'm saying, like, we in a compounded game. Like, take your time, learn the skill set. You know what I'm saying? Like, you don't gotta throw 1.0s and 0.5s and 0.1s day one. Let your account build up. Keep your account preservation. We're trying to build money. You can't keep money if you're not using risk management. I mean, unless you just cold like that from day one. I'm just speaking to the new traders. You know what I'm saying? Like, if you're a new trader, risk management, please. I've had so much heartache and pain. I'm gonna be real with y'all tonight. I have so much heartache and pain just off of not using risk management. Had nothing to do with my analysis. Purely off, yo, fam. Oh, snap. I'm in margin call. I'm sweating, like, for real. So, yeah, Greg, risk management, very important. I hope I answered your question.
Most definitely, bro. Appreciate it.
For sure. Hold on. What's up, Miss Jolie?
So when you make that money, you the money there, sit for a damn, sometimes they get like $30
So Miss Jolie just asked a really good question. That's situational. So let's say that you put 5.05s and you had, I'm just gonna put a slower number, $80 in your account, and you are 15 pips in the negative, well, 10 pips in the negative. So you down $50 on your $80 account. So now your account at $30, but you just started the day at $80, right? It would depend, because it would depend on how far you are if you set a stop loss. Because a lot of times what'll happen is you might do that and you might exit because you're scared to lose the money. But if you look at the chart right here, let's say you enter right here for a sale, Miss Jolie. That's not a good entry, by the way, for a sale, right? We're in a downtrend and you enter at a support level for a sale. So you're about to get some drawdown, right? So price come up 9 pips. What I would tell you, if you were selling it and you knew you were selling it and you were down 9 pips and you were down $60, I would say, Miss Jolie, hold it. If they haven't, because the brokers will look out. They might take one of your positions away, but they're not gonna take all 5 of them away at one time if you go on the margin. Have you had that happen yet, Andrea?
Yeah.
Okay. So I would say stick it out. A lot of people don't trust their buyers, so they'll get out early. Oh shit, I'm down 60. Now you close. I say don't hit your stop loss if you don't get margined out.
So you said margin out.
Margin. So if you go on your MetaTrader 4, Jolie asked me what margin was. If you go on your MetaTrader 4 and you start trading, if you go to trade, you see where it says margin level or free margin. So if your margin level gets under 100 and it start turning red, you start seeing red, you know you're gonna risk more than your account can take. And if you get too much lower under 100, they're gonna start taking positions from you, slowly but surely, right?
Yep.
That's why trading this way without stacking is better, because you don't want to. They trying to prevent you from blowing your account. You know what I'm saying? So I would say that's it. We better get out there to sit here. Now, this is the thing though. Can you sit? That's another psychology piece. Can you be in the negative for 5 hours and a half, 5.5 hours, and still trust your analysis? Because what I learned is that, like, the way we're breaking these charts down, 5.5 hours don't sound like a lot when you say it, but when you're sitting through it, it's like, ooh, whoa, all right, bro. When is this gonna come down, right? When is this bad boy gonna shoot down? So a lot of new traders will see that and they'll be like, yo, fam, like, nah, this ain't good. Like, I'm about to lose all my money. But if you don't get margined out, let's say you put your stop loss up here. Let's say you enter right here, because this ain't a good entry, but your analysis is right. This is why entry is so key, though. This is why I preach where to enter at. Enter at those lower highs, enter at those higher lows, because if not, you're going to sit through some drawdown. Let's say you put your stop loss up here, though, right? Let's say you enter right there, right at my second line, but you put your stop loss up here. So now you're risking like 30 pips. So that's really what got you nervous. You're like, yo, I got like 5.04s on here. I'm down $50. If it go up, and I'm only at 0.6885. Right. So if it get all the way to 6, that's what you're thinking. That's what you're thinking as a trader. Like, fam, if it go all the way up there, I ain't got no more money in my account. Right? So what you want to do is, if it doesn't hit your stop loss, it never did, never broke the high, and if it doesn't margin you out, I tell you to stick it out. It's gonna take a minute. See, this is like 6 hours before you would have been in profit. That's the thing. That's why trading is 90% y'all. This is why trading is 90% psychological and 10% skill. The skill is the easy part. Trust me. No, for real. Once you learn the skill, once y'all learn this skill, y'all once y'all really start to get it, it's gonna make sense. Because Miss Jolie, if you would have entered right here, if you could have just waited it out, look where you would have been at. Bad risk management with your 5 positions at a .04. But hey, you've been eating. You up like 20, 30 pips down here. Probably made like your first $100 day. You know what I'm saying? So yeah, man, I went out on a tangent, but I gotta get to my man Kier. Y'all, moral of the story: use risk management. Patience, yes, Shamika, 100% for sure.
Been holding this thing for freaking 4 days.
Oh, you're on JPY?
Absolutely.
Okay, so let me be honest with you, Andrew.
It's coming down. It's coming down.
So Andrew, I've been holding that thing so bad, I started scalping the buy.
Coming down.
I scalped the buy today.
Yeah, that's good stuff.
Yeah.
Extra monies.
Yeah. Okay. I'm actually probably gonna start getting the most. I'm gonna do a scalping training too.
Mm-hmm.
I know a lot of new traders.
I did.
It's coming down though.
Oh yeah. I mean, even the other day, I was you're up. It's
okay.
nice coming down.
Okay, cool.
Probably about Monday.
Gotcha. All right. I don't know what this is. Kier, basic transfer.
Yes, sir. Basically, I just wanted to get access to basic training videos on chart setup. I'm sure, like, I'm going through the academy, but I'm sure, between you and Mello, you guys have probably done something on that via the academy. I mean, via the GTI Group.
A chart training video for setting up charts, setting up trading view charts.
Oh.
No, if y'all have already done that or not.
So you mean like setting up your trading view, right?
Yes, my trading view.
Yeah, I think Mello has one. Don't he?
No. Not that I've seen, but you can show him how to do it real quick. Is it important?
Nah, I know what I'm gonna do. Kier, I'm gonna make a video about that.
Okay, beautiful.
Yeah, when I get home, it'll be done by tomorrow. What's tomorrow? Friday? Oh yeah. I might have all the time in the world tomorrow. It'll be. I'm gonna put it in the group. I'm gonna make a Loom video. Showing the basics of how to set it up. Like, you mean when you say setting up the charts, more specifically, what you need help with?
Treat me like I'm a baby and feed me Similac.
Okay, so look,
I'm with him.
Okay, so you mean like the actual layout or how I mark up?
All of the above. What you're looking for.
Both.
Understand how to identify the higher highs, the lower lows.
Oh, okay.
Yeah. Your support, your resistance, exactly.
Oh, no. We can. I'll still make the video, but I'll go through that a little bit tonight. Right. Okay. Okay, so he's pretty much asking me what I'm looking for. Bet. Got you.
What a double tap is, all of that good stuff.
Okay, cool. So we're gonna use my favorite pair again, because this is the pair that I pretty much know inside and out now. Again, I'll say again for all the new traders, if you want a pair that's not gonna easily manipulate you, ain't gonna spike up on you too crazy, she gonna move nice and slow. Ladies, don't get offended if I start using pair names as she and her, but I'm sorry, that's how we talk about. But yeah, so all USD, all USD. So yeah, Kia.
Hey,
So y'all, I'm silly. Y'all don't mind me. So Kier, what I like to do, man, is do top down analysis, right?
Mm-hmm.
I like to start here at the monthly, right? Always start here. If you start at the monthly and mark it up good one time, you don't have to come back to it that often, right? Because the higher the time frame, you guys, the bigger the picture. The higher time frames are showing you what the market is trying to do. I'm huge on structure. I'm a buff for structure because the market moves in waves, right? I'm gonna tell y'all something. This right here is worth $1 billion right here. The market either gonna move like this. I'm gonna make this a little bit bolder. gonna move like this. This is just an example. This is an uptrend. Oh, what's up, Bruce? I didn't know you was in here, but I got you though. So yeah, market gonna move like this. This is what an uptrend look like. You got higher highs and higher lows. Does that make sense? So look, y'all. Now y'all remember what I just told y'all. I'm gonna continue to repetition is the biggest thing in trading. Like it's really psychology and then repetition. Get that down. You can make all the money in the world. So look, uptrends, y'all. This is where y'all want to be buying at. On these points. These points. Right? These are your buy areas on your uptrends. An uptrend has to, for an uptrend to continue, it has to make a higher high. So, I mean, you can find comfort knowing that, all right, we're in an uptrend. It broke resistance. This was resistance. This point right here. Price broke that, right? Has to retrace, be your high or low. Buy right here. Because you know that if we're in an uptrend, price has to make a higher high. Has to. If not, then we're about to be in another trend, right? That's uptrends. Downtrends like this. Same thing in reverse. Lower highs, lower lows. Now, all the time, price it's not going to look like this. It's not always going to look this perfect. This is a perfect downtrend and a perfect uptrend. I'm just trying to get y'all the basics. And then the other way the price can move is like this. Very frustrating for a trader. You might see some of this, y'all. Run up, run down, run back up. You're like, bro, what is the market doing? Like, what is this? Run down, run back up, and then run down again. This is like what we call consolidation. You get your market looking like that, you don't really got a direction. Like consolidation looks crazy. It's all over the place. We don't really want to trade it. It's ways to trade in this, but for a new trader, you don't really want to touch markets and they start looking like this. Right? So
quick question, AJ.
What's going on here?
Using this same example, is there typically a average retracement? Okay, I guess what I'm asking is there an average retracement value that I want to look for? Like, this is safe to say that the price is typically going to retrace 30% of what it just came up, or 50%. Does that kind of make sense?
Okay, yeah, it does. Nah, Kier, now that's something that. So with the one of the biggest things that I learned that helped me was being able to trade, learning to trade what I see and not what I think.
Okay.
Yeah, like that's that. When I first heard one of my mentors tell me that, I was like, what? What do you mean trade what I see and not what I think? But it's really simple. Like this is a monthly example. But we're gonna act like we a bank because the banks trade the monthly time frames, right? So look, trading what you see. This was a high point. This is the Fibonacci, y'all. I'm gonna go over this another day. This is my favorite tool to use though. So look, you see, like these are the here. You see, these are the levels. Like, so you asking me if there's an average one of these levels that price will come to? Like, because all of these numbers are like percentages of the move being retraced. What's I about to say? Oh, so let's say that price broke support. you see price break support on a higher time frame, you got to clue that, all right, we should be looking for sales. Especially if you see price get broke on a monthly. If you see price get broke on a monthly support level, this market is a super bearish market, meaning that primarily sales should be getting taken in this market, right? But price is always going to retrace because price has to come up before it go back down, right? So let's say, like what I would have did, found support right here. So from point A to point B, price came up right here, Kier, found resistance. Why? Because it gave you a blue bullish candle and gave you a yellow bearish candle. Resistance is being made. And we got one of my favorite candles that closed in the month of November 2013. We got a bearish engulfing, meaning that this candle engulfed this previous candle. That makes sense. These are indicators that price is about to continue its down move. Let's say I was a bank and I entered right here. I work for the bank. I was trading long term, right? I know price always has to respect structure, y'all. Like, if price would have broke, this is a 38.2. If price would have broke this is a resistance too, right? Price would have broke this, then we're not in a bearish trend no more. We're going up now, right? But let's say I sold here, but then I started to see this happen, right? So these blue candles, price came, made support, bearish, bullish. Price started to retrace up. A lot of folks are panicked. Let's picture that this is like on the 30-minute chart, y'all. Let's make believe. Use our imagination. A lot of people are panicked. They're like, bro, I'm losing money. I'm losing money. Understand, this is what they look like with lines that I just drew. Price came down. Price came up, 38.2. Price came down again, sat on the same support level. Newbies that think it's a double bottom, they start buying. You made a little bit of money, but the overall trend isn't bearish, right? So it came up on you, gave you a double bottom, then it started coming up, and you're like, oh, I sold. You sold right here, which is what you're supposed to do, but you nervous because it's like, oh, it's coming back up. But look though. Price never broke. Stay in it. And look what happened. Right? So if this area never gets broken, if resistance holds, we ain't got no reason to get out of this. That's where that patience comes in, right? Let the candles happen. The great thing about this is let's say that this did happen. Let's do a hypothetical game. Let's say that price did break this. Now you know you're not in a bearish trend no more. Now you know you should be looking for buys, because if this breaks this, guess what it got to do? Let's say it did break it. Let's say the double bottom pushed it up past that last low high. Hold on. I think I got an answer. That's what my gut telling me. What time frame structure? That's situational, Ty. So it depends on. Oh, well, I focus on the 4 hour and up. It's 4 hour and up.
No, you was answering the right way. I was not just talking about like just with that structure part right there. Like, are you on the 30-minute? Do you watch on the 15 when you entered in?
Yeah, so I'm gonna show you. I'm gonna break down the entry for y'all. Because I'm analyzing. I don't really analyze with the 1 hour. But I do use the 1 hour. So let's say I analyze with the 4. I don't know what I just did. Let's say I analyze with the 4 hour or the daily, right? I use the 1 hour to go along with what I'm looking at, if that makes sense. So the biggest thing that y'all need to learn is that the markets are a big system. like the time frames literally like play off of each other. It's called time frame correlation, correlating the time frames together, because this is all one big puzzle. The prices don't change on the currencies. The candlesticks just change, right? And we candlestick traders. So I'm gonna give y'all an example. Let me show y'all. Let me get a more recent example. So I'm gonna answer Ty. This is gonna answer. This should answer Ty and Kiera's question at the same time, right? Let me highlight an area. All right. So if I was looking at this on the 4 hour, let's say I got my bias from the daily, and my daily. I'm gonna just give y'all an example. My daily bias. Let's go to the daily. Let's not even guess. Let's go to the daily. All right. Look. Show y'all something. So look, show y'all something. I like to mark it out. There's a zigzag tool, but see, I like to mark out my own structure. So we're gonna use my trend lines, right? So look at this. Show y'all something. I'm gonna show y'all how structure looks, how powerful it is to mark out your structure. Now y'all don't have to do this, but I'm doing this for the sake of the class tonight, right? So look, this whole time, I don't know why I picked orange. Let's use red. So this whole time, while price is doing this, it's the daily. So look, if you got daily intentions and daily bias, strong, right? Show you how to correlate this real quick. Red, let me change these colors for it. I don't like that orange. That orange too bright. I got yellow candles. So look, right here. Double bottom, high, not really a higher high because this is a resistance area that got matched. Bring out a little resistance line for y'all real quick. Price didn't break resistance, right? That green line is that resistance area. So we got a low, high, double bottom low, double top high, higher low, higher high, right? Price finally broke resistance, made a higher high. But what happened? So remember, this is your last higher low. Price finally broke down. Right? So now you know, when I'm looking on the lower time frames, hold on, because it got a retest. Hold on 1 second. Then we got our first retest. Right? So look at this. This is your support on the daily. Oh man, I did not mean to do that.
I'm putting my calculations for my compound interest for buys and sessions. I'm putting these act dates on the side.
What happened? Price broke support. These candles broke support. Came down. Found it. Retest. Got a lower high. Right? All right. So y'all get the drill, right? So I'm bringing y'all the current life.
So tomorrow's gonna be my first.
This is where we at with AU.
My first day officially to put his stuff in. So then it'll grow by 5% tomorrow, 105. And so basically, I just have it kind of going all the way down Monday through Friday. He doesn't do anything on Saturday and Sunday. So I went all the way down. So I'll be able to.
About to give y'all a gem real quick. So price started making daily high lows, even though it gave me that lower high. And so on the lower time frames, if y'all saw like all of this happen on lower time frames, like the 1 hour, the 4 hour, 30 minute, you would see like, okay, it's upward, it's uptrend structure, right? Right, we got a high low here, and we got a high high here. Now, this signals all uptrend movement. If you bought at this support level, and this support level, if you had a, like you could, like there are certain people who probably bought right here, down here, and they held it all the way up for however many days this is. It's just a great situation to be in, right? This is your last level. I'm really marking up right now because I'm really looking at what AU's doing right now in real life to trade off of it. So this right here was your last support area based off of this. Hold on, let me find it for y'all. I'm gonna tell y'all. Horizontal line, right? Based off of this. Now, show y'all something. Price came up and came down. We're gonna look at these candles one by one. This is really key. If price so that's why knowing support is bearish, bullish, and or bearish, bullish once, or knowing resistances. Once you see a bullish candle, you see a bearish candle. It's key because price came down and it didn't break it didn't break support. Why? Because your next daily candle was bullish, so it's testing this area. Then it gave you another bearish candle. Now, if this next candle right here would have been bearish, hold on, let me see here. Oh, it's the signals go in the GTI Trade Talk group, Kier. Are you in there? The Trade Talk group. That's where the signals get thrown out at. So yeah. Hold on. Let's see my boy. Andrea.
Absolutely. Yes.
Kier isn't in the Trade Talk group.
He's not in the Trade Talk group? Mm-hmm. Okay. I'll put him in. I
gotta add him. Andrea's gonna add you in there, Kier.
Dang, you said he hasn't been in it?
Yeah, he missing out on signals. Hey, y'all gotta get my boy in there. They get on these sessions at night.
It's
so
all
yeah.
good. I just started trading my real account yesterday, so don't feel bad.
Let's go!
That's perfect timing though.
Yeah.
So look, bearish, bullish. Price is testing this support level. Because what can happen is price can come all the way back down here on the daily. This is the overall realm of structure. Like you can make money down here if you break this down to the 1 hour and 4 hour, but like on the overall picture, the higher time frames are really telling you what price about to do. So yeah, test it. Bearish, bullish. Now this candle that closed at 5 today, because all the daily candles closed at 5 p.m. I don't know if y'all knew that, but all the daily candles closed at 5 p.m. U.S. time. So today, price actually gave you your real break of support. Why? Because it was bearish, bullish, bearish daily candle that engulfed that bullish candle. And then you got another bearish candle. So at this point, I'm looking for sales on all USD. So what I like to do is take it down a step further, right? 4 hour. Now, if you look at the 4 hour, looking like a downtrend, right? This is that consolidation I was talking about. Like this looks really like, I don't like the way this look. So what I would do, if you don't like the way something look, if you want some details to get an entry, like look at the 1 hour. You know your bias is bearish. It's a downtrend on the daily, right? Show y'all something. So
Can you tell Kier to look at his Telegram, individual Telegram? I sent him the link.
Kier, can you go look in your Telegram? Andrea sent you a private message with the link to the Trade Talk group. So once I knew all of that, once that daily time frame, daily time frame got completed, now I'm saying, okay, AU's moving in a downward position, right? He got it. He said, thanks, Queen. So let's go over here. I didn't trade this today, but I'm gonna show y'all what y'all could have did with this. I don't even know if this was today. This was yesterday. Okay, cool. So look, run. Basically what I'm looking for, if I know that on the daily time frame, AUD USD is bearish, I'm looking for all of my time frames to start correlating. I'm gonna make a video tomorrow. I'm gonna really break this down to as simple as possible. I'm gonna have to write this down. I'm gonna have to break this all the way down. But I'm gonna tell y'all what I was looking for, right? So right here, we had a low to a high. Y'all follow me if this makes sense, right? I'm gonna show y'all where I would have entered for the most recent move. Had a low to a high. And then we had a high to a higher low. Now, if you know that, and this is a higher high actually, because this was your last high, right? So once I saw this, I was like, oh, nah, we're not selling yet. Like, it ain't ready. It's not ready. But then this happened. Lower high point. And look at the candle, though. Candlestick analysis is the most key, right? Lower high point. If I put my Fibonacci out, it's probably a 38.2 percentage point. Super bearish candle. Bearish engulfing. Engulfed the 6 candles before it, right? So what you want to do is, all right, we got a lower high point. How can we take advantage of this? Because if we got a lower high point and then we broke structure, this was the higher low. So we came down here. So this is your higher low / support level. This is what y'all do. You wait. You got your run down, made new support. So now you got a lower high and a lower low. Confirmed break. So now you know it's bearish. So what would you do? You would wait. We get paid to wait, y'all. The main trend is bearish. The main trend is sell. You wait for the retest to happen or the lower high to get made. And it happened right here. This is all based off of the fact that we know where we are based off the daily. And the 1 hour got to go along with the daily because you got to have hours before you get days, right? So you got your bullish, your bearish, made resistance at the top, right? Bearish engulfing candle, engulfed this candle, right? So how do you enter? Highlight this. Because this is the candle right here that would make you pay attention. Because now this confirms that you got your first lower high point after you got your daily bearish engulfing. Or your daily break of support, I should say. So if it's the 1 hour, a lot of times if I see a 1 hour, like if I see a 1 hour situation like this, I want to go to the 15 minute. If this is the 4 hour candle like this, I go to the 30 and work my way down. But I like to go 2 time frames below my analysis for entry so I can get more detail. I go to the lower time frames and entry for more detail, right? Go to the 15 minute. Now, so look, if you're in a downtrend, you know that it's made of lower highs and lower lows. So if I have a 1 hour lower high point, that means I have to get a 1 hour lower low. Got to. What's gonna make that though? Your minute time frame, your minute time frame candles. The 15, the 5, the 30, the 3, the whatever, right? So look, this is how you enter, y'all. I'm about to get these gems right here. So all of this right here was that engulfing from 1, 2, 3, 4. These 4 candles made that bearish engulfing happen. You don't want to enter. I'm giving y'all minimal drawdown entries. You don't want to enter as soon as that candle was closed. You could and be right, but I'm trying to get y'all the fire entries, the wick entries, right? So what I would do is, let me take this away. Okay, hold on. I'm about to say, laptop, you've been acting good all night. Let's not do it right now. So look, I'll mark this off. So this is also a support level that got broken, right? This whole time, resistance was get broken. But now, support got broken right here, right? It can't go up no more. It's going down. Broke it, boom. Literally, what I would have did, I would have waited for this to break, and I just need to see one retest, one lower high. And I used to be a sucker for, on the lower time frame, I had to go up to 38.2, but I done got a little bit more lenient because I did more back testing. Back testing is what we're doing right now, y'all. Just going back and studying patterns, right? So, yeah, this isn't like a perfect retest for me because I like to see my lower highs and higher lows come up to 38.2 and above. But if I would have saw this, y'all, and a bearish engulfing candle that engulfed that one after my break here, after my break of support on the M15, we're on the M15 now. After my break of support on the M15 and on the H1, I got a bearish engulfing candle. Because this right here, this is orange box, the bottom of it, the H1 bearish engulfing candle already happened. So I know, okay, that's where resistance got made. That's where the next lower high was made. So now I know, okay, price got to go down. So after I got, price came down, price retested back up here, gave you a bullish candle, gave you a bearish candle, resistance. And this bearish candle engulfed this bullish candle right here immediately. As soon as this candle closes, I'm selling. That's literally AJ's process. Taking trades. Like, and now it makes sense. We're selling. We got a H1 lower high based off daily support getting broken. Got an H1 lower high. Now we got a M15 lower high. Because in order for the H1 to be in a downtrend, M15 got to be in the downtrend too. Right? So I say right here, you say as soon as this get done, you ain't gonna have no real drawdown. You might have drawdown because of your broker. Your broker going to pay your broker back. You know what I'm saying? But other than that, price never got back up here. And one more thing that I'm learning, y'all, find out what kind of trader you are, right? This is another thing that I didn't take seriously. Like find out, are you and y'all can see, like if you would have entered right here, you would have gained. Let's see how many pips you would have gained by the time it hit support. Yeah, that's 17 pips in about 5 hours, right? And that's the slow pair. All USD is a slow pair. Structure. Work on every time frame. Every time frame, every pair. Every pair got its own structure. Some pairs are more difficult to read than other, like all USD and NZD USD. Those are the two easiest ones for me to read. They're the slowest ones for me, but some of the other odd ones are kind of slow too. I've been kind of looking at them a little bit, like odd. CAD is kind of slow. Odd CHF is kind of good with structure. For sure, Kia, I got you. But know what kind of trader you are. Are you going to scalp? Right? Like, because I'm getting more into my scalping bag. And if you're a scalper, y'all going to be the people who flip. If you got a small account, scalping, learning how to scalp properly, like it's not really taught a lot because what you say, Ty?
That's what I be doing when I started out with my little $200.
So check it. I'm gonna do a scalp trainer because I'm really trying to like transition. I got an account I'm trying to flip. So I'm gonna tell y'all what y'all can do, right? let's say you know that AUD is on the downtrend, on the higher time frames. Always know where you are on the higher time frame. Break it down. This your lower high point. You a scalper, but you want to be a swing trader. Okay, so I'm gonna tell you what the difference is. A scalp, huh? Oh shit! All right, hold on. Landlord about to get me out. Let's say you want to sell right here, right? A scalper could do this. You're on the 15-minute chart. So scalping is based on how many pips or how long you trying to place, like hold your trade. Are you gonna hold it for a few like minutes, few hours? Swing day traders, they hold their trades for up to a day, half a day to a day. Swing traders, a day, 2 days, 3 days, 4 days. Long-term traders hold their trades for a week or 2 or 3 months, right? Scalpers, I'll scalp this. I'm entering right here, and I'm taking this to the 61.8. We're getting in, we're getting out. Scalping, we're getting in, we're getting out. Now with scalping, y'all remember this. With scalping, you can use higher lot sizes because if you're scalping, you can base your stop loss on literally this right here. So you can enter right here and say, as long as it don't break this high, we good. So you're only risking right here. You be if you enter here, 68.01, you put your stop loss at 68.14, you're risking 13 pips. Calculate that accordingly, right? But take it down to 61.8 of the 27, and we getting out the market. That's gonna take 15, 30, 45, hour, 1 hour 15 to get to. So swing traders, and this is what I was telling Mello a few months back. Understand, and I'm gonna say this, and then I think my time about to be up, right? Correct. So look, understand if you're gonna be a swing trader, Shamika. Let's say you saw all of this. This is an ideal place to sell. This is the 4 hour. Let's say you placed the sale right here after this bearish candle was closed, right? If you're going to day trade or swing trade, you have to understand what your move is based off of. You're saying, I heard what AJ said on the training session. It's at a 4 hour low or high point. This bearish candle right here just got closed. So I'm looking forward to break this low and make a lower low, which it did. But you have to understand that if you're a swing trader or a day trader, these moves take longer. So you enter after this. 6893. Price starts to do this on you on the lower time frame. It look even scarier though. I ain't gonna. So you like, oh snap. Oh nah, bro. You know what I'm saying? Let's say you put your stop loss above this high. So you're risking more pips, which means that your lot size has to be lower, but that's fine because you're gonna catch more pips over time. Swinging. We swing in the trade, right? So you enter right here, you down 20 pips, 15, whatever. Swing trading and day trading takes a certain amount of patience, what I'm trying to say. Like, you got to be able to wait for 8, 12, 16, 20, 24, 28, 32 hours before it even breaks the support. It's going to get to a lower low, but are you willing to stay in that trade through all of that fluctuation? So that's why I say, y'all learning y'all trading style is something that I didn't take very seriously at first. I was just getting in doing stuff. But knowing what your goal is, knowing that if you enter at a lower high based on the daily or the 4 hour or 1 hour, if it's a 4 hour time frame, so it's going to take hours for the move to happen. It's a 1 hour time frame, so it's going to take hours for the move to happen. The market don't move when y'all want it to move because y'all don't control it. So if you enter on the 30 or the M15, because I mean, you should be basing your entries. You should always base your entries off the lower time frames, but off of the overall. What's your overall move you're trying to make? Are you trying to take it to the M15 lower low? Or are you trying to wait for some hours or a day or two and take it to the 4 hour lower low? understand that. All that stuff we said tonight, I'm so glad we recorded this, but understand that, y'all lit. So yeah, man, that's my time, y'all. I gotta go. So y'all holler at me in the DM, hit me on Telegram if y'all got questions. I'm gonna post the trade trainer from Tuesday tonight into the group. I forgot to do it. So I'm post that tonight. This was gonna be posted in the morning probably. Kier, I'm still gonna make that video for you. I'm gonna go back over that again. And yeah, man, I appreciate y'all coming on with me, man. That's my time. GTI, let's get these pips. And I'm out.
Appreciate you, boss.
You know what, bro? You know what, Bruce? I got you. Get out of here. Y'all get out of here. I can't get out of here. Oh, snap.
All right. How exciting is this?
Man.